Do you ever think, like, are they doing this on purpose? I'll explain, guys. Welcome, first of all. Thank you very much for joining me in this video. My name is Mike. This is IPO Market Watch. Although we don't cover just IPOs, we cover everything on the stock market. Stocks trading on the, already trading for years. So if you want to know a lot of things about stocks, bonds, whatever, IPOs, subscribe to this channel. Now, guys, we're going to talk about what is going on lately with SVB. I'm not going to explain in detail. Okay, SVB bank, this is what happened, and so on. You already know it. You heard about it, and so on. But sometimes, man, I think, like, I don't know, like, in a broad general sense, is this like done on purpose or something? I mean, when you get, it's frustrating. It's frustrating. They print money in 2020 like there's, I don't know, like there's no end or whatever. Like inflation never existed, and then we get inflation. Then they screw around with quantitative easing and tightening and all that stuff. Then they're like, we have inflation, let's fight it, and so let's start raising the rates, rate hikes, and after that you create now in 2023 what seems to be affecting heavily companies, but mostly the banking sector. SVB is just an insane thing. I mean, this is the biggest financial crisis in the banking sector since 2008. You know it, you heard it, it's being all over the headlines. But the thing is not over. I mean, there's the whole talk about it. Is it going to be contagious? Is it going to spread all over? Of course it is. Is it the end of the world or the end of the entire national financial institutions in the United States? No, of course not. Let's not get over ourselves. Let's not say stupid things. But it is, because it's interconnected. I mean, think about it. There's companies that have had deposits in SVB. All that stuff is going to come out more into the light soon. Next week, this week coming up and so on. You already know about Roblox. You know about Roku. Elon Musk. You've heard about the news that Elon Musk is interested in buying SVB. He, under certain circumstances, he said he would be open to buying the bank. This is crazy, right? Or good, if it depends on how you see it. I think probably good. That would be good, I think. All right, so crypto is affected also. Is it going to crash? Of course it is. Why? Well, I'll show you in a little bit. All right, first of all, SPY plunges as investors fear SVB collapse isn't the end of bank failures. It's not the end. The economy, is interconnected. There's also going to be other banks that are weak. I mean, it can't just be SVB. With all that being said, though, at the end of this video, I will show you how we can make money. All right, I don't want to just make a video, paint the whole red picture of, the end of everything and just leave you feeling like there's, I'll show you some things that are making money already on the market. They are. The market's going down, they're going up, and I'll show you. And as the market gets worse, they'll make more money. So I'll show you that at the end of the video. Silicon Valley Bank's demise began with downgrade. By the way, did you see that? One of the users on my Discord posted this earlier in the Discord, but this is, it's average Joe's has to pay the price. The rich, the people at the top, they're not going to pay the price. People within Silicon Valley Bank, of course they knew, but it says here in the middle of last week, right? In the middle of last week, before the massive sell-off on SVB, Moody's Investor Servicing Corporation delivered alarming news to SVB Financial Group, the parent of Silicon Valley Bank. The ratings firm was preparing to downgrade the bank's credit. So they alarmed them from before. They warned them from before. I'm sure even SVB knew it. It's what's going on within their own business, and the top bailed out. Of course they did. They didn't say anything. Nothing. Let the stock fall, and as it's falling, the average Joe clueless is buying shares. It's on a discount and so on, or maybe they put put options and so on. But hey, they knew. All right. They knew. Elon Musk says he's open to the idea of buying Silicon Valley Bank, but a Tesla investor tells him no thanks. Of course, there's going to be opposition from major Tesla shareholders. They were already mad with Elon Musk getting involved with Twitter, because that's going to have an effect negative for Tesla shareholders. All right, when Elon Musk gets involved into something else more heavily, they feel that he would not be so involved in Tesla, or maybe sell shares of Tesla and so on. So, but we'll see what happens with this one, because it's very interesting. But do not worry at all if you work for SVB, or if you're a shareholder of a company that has deposits in SVB, which is definitely going to bring the stock down. Don't worry at all, because the SVB CEO, Mr. Becker, addressed his employees, and I'm sure the shareholders also, with a heavy heart, it says on Reuters. He had a heavy heart because this millionaire, I don't know if he's a billionaire, it's fine. I mean, why would he have a heavy heart? I don't even, who believes that he had a heavy heart? Yellen says bank system remains resilient in the wake of SVB failure. Janet Yellen says it's resilient. I should believe it because back in 2017, Janet Yellen was the one that said in our lifetime, we will not see a financial crisis. And here it is. So I should believe it. SVB collapsed. Roku had $487 million in cash. That's huge. And the stock already went down on Friday because of this news. There's also Roblox. There's also rocket companies with 8% of their cash in SVB. And many pharmaceutical companies. And you know what? That's even worse for the pharmaceutical stocks, especially if they're a small pharmaceutical place. And the shareholders of those pharmaceutical stocks could be in big trouble because if those companies aren't able to get all their cash back and they can't fund their it'll affect funding with their clinical trials. Imagine that. But I think that it's not so dramatic because the U.S. Regulators have stepped in, and they obviously the FDIC has promised that people will get their money. Obviously, right? So I don't think it's so as bad as it's made to be. Crypto shaken as SVB exposure deepens. Deep pegs $37 billion stablecoin, which had $3.3 billion deposited in SVB accounts. And so here it is. USD coin or USDC is an asset-backed stable. When stable coins, if stable coins collapse, right, it's the end of cryptos. Right? People have to. And when I think about that, I think, okay, it's sort of like as if it's done on purpose, right? You have the Federal Reserve preparing, publicly they said that they're preparing, and to implement someday the digital dollar, right? Now, when Jerome Powell took center stage and talked about the jobs report, for example, he said that the jobs report came in hotter than expected. I have a hard time believing it. They said there was 337,000 new jobs added to the market. What kind of jobs are those? Right? Because it seems to me that most people are living check by check. And I did a poll, which doesn't matter anything. In my polls, I just a few hours ago, I put it still early stages. There's only 88 people voted, so it's just a couple hours ago that I put it. But so far, people are, I said in a recent interview, this is J.P. Morgan, not Jerome Powell, but J.P. Morgan CEO Jamie Dimon. That was in an interview that he had with a Bloomberg reporter in Florida. I can't play the interview to show you because last year I put a Bloomberg video and I played and I got a copyright takedown for that, so I can't. But you can, the video, if you search Jamie Dimon Florida Bloomberg interview, it's on YouTube. You can see it. In that interview, he specifically said that Americans right now have excess cash in their bank accounts, and he also went to say something scary, that by the end of 2023, he believes that excess cash will be wiped out, right? Take it in. Let me know what you think he meant by that. The fact that he says that the Americans right now have excess cash in their bank accounts, I don't believe it, to be honest. I'm not saying anything bad about Americans, but I think that in Europe and in the US, globally, people since the pandemic are struggling a lot, in my opinion. But in the poll that I made, most people are saying that they do not have excess cash in their bank accounts and that they go check by check, right? Now, I'll let that poll run a few days so we can see, but so far it's overwhelmingly that people are saying that Jamie Dimon is wrong at what he says. And if we look deeper into the headlines, we're going back to Jerome Powell. He said that, the jobs report came in hotter than expected, which, what are you talking about? Most people are struggling right now, so I don't know what this job report on. Here it says jobs numbers are near record highs, right, is what Jerome Powell said. Well, while this statement remains true, it says here, this was from Zach's website, while this statement remains true for the government track numbers, these numbers tend to lag. Job listing websites such as Indeed are more of a leading indicator and show a significant drop-off in the number of openings available. A slowing employment market should lead to slowing of rate hikes. Jerome Powell went on to say that the ultimate level of interest rates is likely to be higher than anticipated. The Fed is clear. They want recession. They're driving this economy straight head on to a market crash. The other positive part, I guess we can look at that out of this is, one, things I'm going to show you at the end of the video, and two, JP Morgan CEO Jamie Dimon did say in that Bloomberg interview in Florida that he does see recession coming, but that we should not, he said that we should not worry because the recession will only be a couple of months and then we'll be back up and running. Silicon Valley Bank's failure may lead to smaller Fed rate hike. We'll see. I don't think so. And if that's not enough, did we forget that the debt limit hasn't been fixed yet? I'm guessing that they're going to drag this one also to the very last minute on while the parties throw accusations at each other and use this debt limit as an opportunity to accuse one another in the eyes of the American citizens. But I think that this is going to be another stupid political dispute that has to be solved anyways. You can't let the United States default. It won't be just something bad for the US. If the US defaults, we're talking about the entire globe is going to have a huge issue, right? Europe and everything. So there is no way the US won't raise the debt limit. They will raise the debt limit. There won't be a default, in my opinion. It can't happen. It can't be allowed to happen. Which party is going to take the responsibility for that? But they're just going to drag this to the last minute, which will cause, I think, huge damage to the stock market. So let's get to some answers, right? Or some type of solutions that we can think of. Now, don't trade any of this according to my video. These are just ideas that I'm throwing around, personally speaking for me, right? One thing that people did not notice is that the international markets so far are doing really well. They're doing really well. And I think that for the rest of 2023, if the US markets and the US economy gets worse, of course, it's going to drag also, let's say, the European markets down, right? You can't say that the U.S. markets are going to go down and Europe is going to be on a bull run. That's not, everybody knows that can't happen. But I do believe what Ray Dalio said 6 months ago when he said that the European markets will outperform the U.S. markets in a downturn. So far, the European markets are surprisingly well. If you look at the MSCI Athens, MSCI, I'm sorry, not Athens, Greece, MSCI Germany, those are those ETFs are doing stunning, or really good, or good enough. And so to have an exposure and a diversification we've been talking about for years. Some people think about diversification or dividend stocks and so on once there's a huge crisis and their portfolios are bleeding big time. But diversification really saves. I've been diversifying my portfolio for years. And one of the things I did as an experiment was long ago, I would buy 10, 15, maybe 20 tops shares, sometimes 25, let's say, shares tops, right? 5, 10, 20 shares of one company, and that's it. And then buy 5, 10 shares of another, but obviously of good companies, not just, not go to the moon, trust me, bro stocks. And I would accumulate a lot. And then when the 2020 market crash came, yeah, okay, they went down. I get it. Everything went down that. But it seemed like that portfolio where I had a huge diversified, not just U.S. stocks, but also from global stocks and global equities and ETFs and so on. The drop on that portfolio was so tiny compared to the other portfolio where I just had 200 shares in that one, 100 shares in that, 500 shares in that. You know what I mean? And it was just U.S. stocks. That one took a huge hit. Whereas the one that also had a global diversification was so tiny that... So guys, ALPS International Sector Dividend Dogs ETF. This one, IDOG is the ticker symbol. This one, let me read to you what it is. The ALPS International Sector Dividend ETF is an exchange-traded fund that mostly invests in large cap equity. The fund tracks an equal-weighted index that selects the 5 companies with the highest dividend yield in each of the top 10 GIC sectors from international developed markets. And indeed, it has the top of the top or best of the best companies from all over the world. Now, I could have mentioned these, for example, the UVXY, UVIX, SPKY, LABD, and many more inverse ETFs, right? That are inverse of, let's say, the S&P 500 and so on. You could have, I could have talked about this 2 weeks ago, 3 weeks ago. But 2-3 weeks ago, 1 month ago, you couldn't for sure have known what would be now the market conditions, right? So you would be absolutely an absolute gambler, gambling 100%. And it might not have worked out in the beginning. You think, what did I do? Why did I get in? Let me get out, take a small loss, and so on. Now we know where we're at. Now we know 100% where we're at. Right? Things are not looking good at all, especially with the SVB thing. And I think that this week coming up, in my opinion, I'm more sure now that the UVXY, for example, the ProShares Ultra VIX short-term futures ETF, which is trading, I think, around 610, 620 it closed. I think that this week coming up for the entire week, I think it's going to do well. It doesn't mean that people should trade according to this, and you should not. But or how about the 2 times long VIX futures ETF? Or convexity shares daily 1.5 spikes futures, direction daily S&P biotech biotech. So many biotech companies have money stuck in SVB right now, and there's many more. There's other ETFs that short the Russell 2000 and so on. So yeah, these are some some ways that, but I wouldn't, those aren't things I would say that they're great for long term. Great for the long term, for example, I like iDoc, fine, it's a great ETF, I think, in my opinion, but these are just, I think, in my personal opinion, I would look at them this week, because if everything's going to be bleeding this week, let's say, and everything is red, might as well, these are going to be green, right? If the market is bleeding, this one's, I mean, look at the UVXY, it's up 32%. The UVIX is already up 43%. Thank you very much for watching this video. Let me know in the comment section below where you think the market is headed. Trying to time a market is dumb, as Warren Buffett said. Far more people, like Peter Lynch said, far more people lost money trying to anticipate a bear market, getting out of the market because of anticipation of a bear market and so on, than just staying in the market. So getting out of the market, personally speaking, for me, I never got out of the market. I've been trading for many years. I never got out of the market. I've been through 2018. I've been through 2020. I've been through a lot of things. I'm not Warren Buffett, but I never got out of the market, right? And overall, looking back now, after trading for so many, it worked out good. It worked out good. If I had gotten out, I would have missed out on some things, right? So that's just my opinion, of course. I did make a video last year about treasury bonds. I made a video about investing in bonds and so on. I will definitely have to redo that video. I know some of you want to see that video or a new one, so I'll do another one. Overall, always have a diversified portfolio. All right. If you're old or a new investor, get to work. Start having a diversified portfolio. In the good days of trust me, bro, we're going to the moon and all that, you don't care about diversified portfolio until you realize you should care. All right. So diversified portfolio. Invest in U.S. markets. Invest in global equities. Invest in ETFs. Invest in bonds. Have a diversified portfolio. You'll be a lot better off. Thank you very much for watching this video. Wish you all the best and take care.
Are you looking for a Discord platform that offers a first-class trading community? That's what you can expect when you join Bull Market Watch. Trading can be challenging for some people, but we're here to simplify the process for you. We have a very powerful track record. Our Discord deals with day trades, swing trades, and long-term trades. Hundreds of traders operate through our Discord, where we come up with stocks to trade for profits on the NASDAQ and NYSE. With a low monthly subscription of $9.90, you will have full access to our Discord, where you can interact with other traders and get all the latest news when it comes to trading as well. It's a community that is extremely supportive of one another and always willing to help each other out. Become a member of Bull Market Watch today and be on your way to a better financial situation.